What is an aerogel? You may be wondering. I know I certainly was.
Reaching a point where they are nearly at break even. And in fact, they expect to generate a very small GAAP net profit for full year 2024.
Today we're talking about Aspen Aerogels. And if you're wondering if this is a hair product episode, we've got plenty in store for you. Remember to hit the subscribe button and join the Semiconductor Insider membership. It's just $5 a month. Gets you access to all of our show notes, Discord access with a great community, live Q&A sessions, and so much more. Is Aspen Aerogels a hair product?
No, it is not. It does not have anything to do with hair products. In fact, let's categorize this as an infrastructure company. More specifically, we could maybe even say a products all the way at the base of the hierarchy of the economic pyramid on the left. This is not exactly a semiconductor industry supplier, but just for the sake of familiarity here, let's put this under base materials. And the reason why we're going to put it here, if you follow along with our portfolio, you probably know that our base material stocks comprise companies like Air Products and Chemicals, Berkshire Hathaway, which has a hand in all sorts of manufacturing products. Our two bets on lithium, Albemarle and Arcadium Lithium. And it's that product in particular, lithium, especially used in electric vehicles, that brings us to Aspen Aerogels.
Aspen Aerogels will also come into play when we're talking about our investment into Air Products. Air Products is a leader in natural gas liquefaction technology, which we talked about recently when we talked about GE Vernova. If you haven't caught that video, we will link it here as well as in the description for you to check out. So what is an aerogel? You may be wondering. I know I certainly was. Aerogels are low-density solids manufactured by removing the liquid component from a gel. The remaining material is porous and possesses key properties like ultra lightweight and high thermal insulation.
So maybe to relate this to hair products, if you're a fan of 90s hairstyles, those are coming back. Maybe you're trying to get your hair to stand straight up or stay exactly in one place throughout the day. Maybe you use a gel, put it in your hair, the liquid dissipates and it leaves behind this ultra lightweight, hopefully not too shiny material that keeps your hair from moving whatsoever throughout the day. This actually has a far more important application in the world of manufacturing. This is a slide from Aspen Aerogels. They've actually borrowed this picture on the left called the flower from the Lawrence Berkeley National Laboratory, which we have labeled there. The picture illustrates the thermal insulation properties of aerogels. Because these materials are so lightweight, they can be engineered and manufactured to have incredible ability to withstand the transference of heat. The downside of these is they are very difficult to manufacture at large scale. The reason for this is those little pores of air, the little pockets of air inside of an aerogel that gives them that high thermal resistance property. Sometimes those little pockets of air are just nanometers in dimension. So we know all about nanometers here on Chipstock Investor. We talk about nanometers all the time when discussing how tiny the tiniest features are on microchips these days.
Let's talk a little bit more about the problems that Aspen Aerogels is solving for. No doubt you have seen many media reports of a Tesla exploding into flames. Those definitely became popular videos in the last couple of years. And one of the problems that Aspen Aerogels is solving for is providing a barrier in lithium ion batteries. They're preventing that thermal runaway. So let's say a car is in an accident, those barriers protect the cells in the lithium ion battery and prevent it from catching on fire, or at least delay the thermal runaway significantly.
Yeah, when you say those videos got popular, especially popular amongst those saying, this is a good reason not to buy an electric vehicle. I could get stuck in my car in an accident and get engulfed in flames. So new technology requires new features to be developed to help prevent unforeseen occurrences like that. Aspen has a number of different products that they apply in what they call this pyrothin platform, these ultra thin layers of aerogel that go in between those individual cells. And they figured out how to not only manufacture this at large scale, but also to get this done pretty quickly. They have just a couple of manufacturing facilities in Massachusetts and Rhode Island. They have some agreements with automakers. GM, General Motors, is their biggest customer. GM gradually rolling out its Ultium platform for electrification of its vehicle lineup. And in just a matter of a few weeks, they can have these aerogel barriers shipped to the customer, ready to be installed into the battery pack. The results must be pretty good because GM in particular has significantly increased its orders from Aspen Aerogel in the last year. We'll get to the financials here in a bit, but you can see specifically some of the revenue derived from the GM Ultium platform there in the bottom left in the bar chart, nearly double year over year.
This is the other segment that Aspen Aerogels focuses on, the energy and industrial insulation products. This is where Aspen Aerogels fits in with a company that we invest in, Air Products, which has a process for creating liquid natural gas.
Yeah, there's a lot that goes on besides just putting the liquid natural gas through a pipeline for delivery. Insulation is an important property. On the right there, Aspen has a little schematic showing just how small a little film of pyrogel can be around a liquid natural gas pipe compared to some other products that are commonly used for insulation purposes. So this is another growth market for Aspen Aerogel.
Has to be pretty intense if it can withstand 315 degrees Celsius.
Yeah, and not a very large diameter of material at that to withstand that temperature. To boil it down, this is actually a pretty simple business. Those are basically the two growth markets here: electric vehicle batteries or thermal barrier. You can see in the bar chart on the right-hand side of the screen in blue, thermal barrier, and then energy industrial is their other product segment. This stock actually originally popped up on my radar a few years ago. I was using a portfolio organization tool called Nunam.ai to organize a bunch of businesses by secular growth trend. Aspen Aerogels actually has been a public company since 2014. Most of that time, it's been in research and development phase. Hasn't generated a lot of revenue, but here in just the last few years, they've started to generate some significant sales from these two secular growth trends: electric vehicles and things like liquid natural gas pipelines, which is an energy transition fuel. Check out some of our prior videos on that for some explanation on what that's all about. In a nutshell, rising energy needs in the US and other geographies because of things like data centers and electric vehicles.
You can see 65 million of their revenue was the EV thermal barrier, and then 29 million was part of that energy and industrial revenue. And that portion of the business is supply constrained. You can see that here under energy and industrial. It is growing, but they do need some further manufacturing facilities to continue to ramp this segment up.
Overall, the business is expected to grow quite rapidly this year. Management updated its guidance for full year 2024 based on primarily that increasing demand from the GM Ultium platform, but they're also bringing some additional manufacturing online as well. So they now expect that thermal barrier business for EV batteries to be about 230 million, and then the energy industrial business to be about 150 million. At this point, you may be wondering, and you would be correct to think this: okay, this is a simple business. It makes a manufactured product. It's a patented product. However, this is ultimately just chemical engineering. Surely there are a lot of competitors for a company like Aspen Aerogels.
If you're thinking that, you would definitely be right. There is a number of competitors that they list in their 10K.
Most of them we have never heard of, and suspect most investors have never heard of either.
And they also mention that there is a growing number of other competitors in the market as well. All of those competitors are seeking to enhance the traditional materials and develop and introduce new and emerging insulation technologies.
Insulation of various kinds, obviously a fairly good sized and important part of the manufacturing sector, transportation sector, so on and so forth. But there's no one dominant player in this market for good reason. Barriers to entry are fairly low.
Aspen has also had to have some legal battles as well in regards to patent infringements. You can see this one here. They sued a Korean aerogel supplier and the Norwegian parent company for patent infringement. And then they also had a lawsuit against some Chinese manufacturers of aerogels, and they won that patent lawsuit.
Yeah, I expect that this will probably be a news item you see fairly frequently for a company like this if you decide to continue following their story. The competition is fierce. Now, Casey, you did mention with that growth that they've been enjoying, they are capacity constrained. Currently, that constraint has to do with the energy industrial segment, in particular in support of its liquefied natural gas customers, LNG customers. But as EV battery adoption, be that for a full electric vehicle or maybe even just a hybrid vehicle where there's still a much larger lithium ion battery, at some point Aspen is going to be capacity constrained in that segment as well. So they have the two manufacturing facilities already in Massachusetts and in Rhode Island. They've been investing to bring some external manufacturing online this year as well to meet some of the rising demand from their customers. And then they did just enter this US Department of Energy program. The purpose of this is for the DOE to assess the products and potentially extend a loan to Aspen to further expand its in-house manufacturing. So stay tuned for more information on that as we get it. At this point, we have a classic manufacturing business. Making more money costs more money. And this is not a new problem for Aspen as they have scaled out of research and development phase and into more full-blown production of their products. Over the recent few years, they have actually accepted investment a few times from some outside sources.
Yes, this article is from 2022, where they accepted a $150 million investment from Koch Strategic Platforms. You may recognize that name. Koch is a privately owned industrial conglomerate. Koch has invested into Aspen multiple times and does remain their largest shareholder.
We're going to come back to that again here in just a moment because that's important if you're mulling whether you want to make an investment. But first, back to this problem of it being a classic manufacturing case where as you grow and make more money, it also costs more money along the way. That said, Aspen is reaching a point where they are nearly at break even. And in fact, they expect to generate a very small GAAP net profit for full year 2024. A whole whopping $2 million on at least $380 million in revenue. At least that's the expectation. So 59% revenue growth should help them turn the corner from GAAP net loss to GAAP net income. However, do draw your attention to the sections in red, capital expenditures. That's where the company has to spend money on property, plant, and equipment to expand how much product it can make and therefore sell. They're going to have to spend money to expand their manufacturing base. And as a result, you can see GAAP net loss, the blue bars, very quickly homing in on zero and possibly about to turn the corner and flip positive. Even while that is happening, the orange bar, you can see negative free cash flow as a result of those capital expenditures.
And here is Aspen Aerogel's balance sheet. You can see the gray bar, that's the total cash and short-term investments. It has been steadily decreasing because of that negative cash flow. Long-term debt has stayed pretty stable. It's currently at about 118 million with 101.5 million in total cash on the balance sheet. Because of their expansion goals, Aspen will definitely need to start raising some cash. And that's where that DOE possible loan comes into play. And what's another way that they may start to raise cash, Nick?
They have had this ongoing ATM offering, a very appropriate acronym for at the market offering. This is where a company issues and sells new stock on public stock exchanges. So this agreement is with the broker B. Riley and Associates. Not going to delve into the inner workings of that relationship and where there could be some conflicts of interest, but do know that Aspen Aerogels has issued some new stock at several points over the last couple of years to boost their cash. Perhaps they won't utilize this outlet again. Maybe they will just give the DOE loan and that'll cover their plans for the time being, but definitely worth mentioning.
Just a quick note that these last few charts that we've been using finchat.ai to help us with all of our research. They have a fantastic co-pilot service where you can learn about companies and lots of KPIs to analyze and create these charts. If you would like some help in your analysis, check out our link below. Gets you 15% off of a membership. Let's talk about the outlook.
Okay, just one last time here to drive this point home before the last final slide. Updated 2024 outlook for revenue, now at least 380 million. GAAP net income, at least 2 million. No, that is not very much profit, but this company is just now hitting profitable scale. And that is the reason for the additional guidance numbers they provide there in the second chart on the bottom. Adjusting net income to arrive at adjusted EBITDA, earnings before interest, tax, depreciation, and amortization. This earnings metric, just a way to show that a company's core manufacturing operation does have the potential to generate a profit. So why aren't they yet? They're still scaling, as we've been talking about. It's an important point here as we move to a reverse DCF, reverse discounted cash flow, to try to figure out what's a scenario that would need to happen, especially in the next few years, to get us to a fair value of about $24 per share, or roughly $1.8 billion market cap for this small business.
We used a GAAP earnings per share estimate of 3 cents for this year, 2024, with an earnings per share growth of 165% averaged over the next 3 years. 8% terminal growth rate thereafter, and a 10% discount rate. That brings us to the fair value of around $24.
As far as those earnings per share growth rates in 2025 through 2027 in the triple digits, is that feasible? Is it reasonable? Remember, net income is going to be a mere $2 million if the guidance for 2024 is correct. 250% net income, or on a per share basis, earnings per share growth in 2025 would just get the company to about 7 million in profit. So we're talking about very small numbers here. This is what can happen as a company reaches profitable scale. As they flip the corner from negative to positive, you can get some really dramatic increases in profit growth rates for a couple of years. That's why those numbers are so high in this model. And I guess the question is, Casey, what do you think about this business? And are these reasonable expectations?
Let's take a look once again at our current base materials stocks. Air Products, Berkshire Hathaway, Arcadium, Lithium, and Albemarle. Would adding Aspen Aerogels possibly add to our portfolio picks in this area? I would say my answer is maybe. It certainly seems possible that this product could become a must-need in the EV industry, especially. And as you mentioned in that DCF, these bars are really not that high to clear from a currently non-profitable business.
The one scenario that we did show you, it's plausible for sure. I wouldn't call this egregiously overpriced business. I will say, though, trying to stick a fair value on a company that is not yet profitable, but quickly expected to reach profitability, at least by some metrics, GAAP net income being that metric, can be highly problematic because the high number of possible outcomes, they're all over the board. Aspen could turn a profit this year, and then because of elevated spending in 2025, maybe that earnings per share growth gets pushed out a couple of more years. So we just don't know. But this is just one specific outcome. This illustrates why we often say, especially with small cap businesses like this one, where investors are trying to capture lightning in a bottle, so to speak, trying to catch a small business before it really takes off. It's really important to have a basket of these. In the vast majority of cases, no reason to bet the farm on this business because the most likely outcome is it just doesn't perform that well. So, for most investors, and for ourselves included, we tend to take a moderate approach where we will add a very small position in a company like this, add it to our basket of usually at least 2 dozen small cap, hopefully very promising businesses. And then if the story plays out like we hope it will, we'll slowly add to it over time. I think I'm interested after briefly taking a peek at this a few years ago, and then more recently seeing it pop up as it's obviously been growing very quickly with some of the traditional automakers starting to adopt electrified vehicle lineups. I think this does add a potential position to our small cap portfolio in particular that we don't have yet.
That's a wrap for this episode on Aspen Aerogels. If you want more discussion on this company, make sure you check out our Semiconductor Insider membership on Ko-fi. Link is in the description below. We have all of our published show notes, live Q&As, and more discussion on what we're buying over on our Discord channel. See you over there.
It's just $5 a month. That's right. At that rate, 5 months of Chipstock Investors Semi-Insider, which adds up to about 1 share of Aspen Aerogels at this current price. We believe pretty strongly that we add a lot of value for that $5. Check it out.